On paper, Tesla is worth 3 times more than Toyota. In fact, it's actually worth more than Toyota, Volkswagen, General Motors, Ford, Fiat Chrysler, Nissan, and Mercedes or Daimler combined. And yet, in the latest global brand rankings, Toyota is ranked significantly ahead of Tesla. Who knows? Hello, my friends. Welcome to the Electric Viking. Fantastic to see you. Thank you for supporting the channel. Thanks for liking the videos, subscribing to the videos, and coming along and being part of the journey towards a better future. Now, Tesla has almost tripled its brand value in the last 12 months, according to the 2021 Best Global Auto Brands rankings released yesterday by Interbrand. However, even that astonishing growth wasn't enough to dethrone Toyota as the world's most highly valued automotive brand for the 18th year in a row. Now, Toyota came in 7th overall in the world for the 5th consecutive year, trailing Apple, Amazon, Microsoft, Google, Samsung, and Coca-Cola in the 2021 rankings by the marketing and management consultant. Let's just pause for a second. Where do you think that Nokia ranked in global brand ranking in 2005? Well, now they don't rank in the top 100, but back in 2005, they ranked 5th. So what happened? Well, we all know what happened, don't we? But I think we're going to see a similar event happen to Toyota. I'll put a link in the description below to the videos I've made about Toyota's likely fall from, well, relevancy in the global automotive world within the next decade. Why? Well, it all comes down to one thing. They are not interested in electric cars, at least not in a genuine way. Now, incredibly, the world's biggest car maker, not by much by the way, managed to close the gap to 6th placed Coca-Cola slightly, increasing its value by 5% to $54 billion, while Coca-Cola grew 1% to $57.5 billion. Interbrand's methodology is not based, though, on sales volumes, revenue, or share value. Instead, 3 key pieces of analysis form the valuation's basis: the financial performance of the branded products or services, the role the brand plays in purchase decisions, the brand's competitive strength, and its ability to create loyalty and therefore sustainable demand and profit into the future. While considering the future consists of entirely of electric cars, I'm not so sure this brand report has really done its research. Apple topped the rankings for the 9th consecutive year and increased its value 26% year on year to $408 billion. That puts it comfortably ahead of an also fast-growing company, Amazon, up 24% to $249.8 billion. Who's in third? Well, third place was Microsoft, who added 20% value to its total. They're now worth $210 billion according to the rankings, while Google is up 19% and Samsung is up 20%, rounding out the top 5. Now, Mercedes once again played second fiddle to Toyota in automotive terms, securing 8th place overall, right behind Toyota and ahead of McDonald's, Disney, and Nike. BMW came in 12th ahead of Louis Vuitton and Tesla in 14th. Honda was the next best automotive brand, down 5 places to 25 in 2021, followed by Hyundai, Audi, Volkswagen, Ford, Porsche, Nissan, Ferrari, Kia, Mini, and Land Rover. Now, the key issue that I have is that many people base their investing decisions off this kind of ridiculous analysis, in addition to articles by noted bears on Seeking Alpha, often written by Jonathan Weber, such as an article called Tesla versus Toyota, which EV stock is the better long-term buy, and then criticize anyone in the comments who disagrees with their article in any way, and agrees with everyone who says anything negative towards Tesla. Well, the problem is, people often read this kind of misinterpreted, misunderstood financial advice and use it to invest. Point in case. If in 2011 you invested $1 in the shares of Toyota, by the end of 2020, you'd have $2. That means an average annual return of 10%. If you were unlucky enough to invest in Ford, you'd have about 50 cents or half a dollar. And with most of the other car companies, you'd come somewhere in between. All in all, nothing to write home about. In fact, pretty poor returns in total, really. Now, for anyone who had the foresight to buy Tesla shares in 2011 and the wisdom to hold them for 10 years, not a long time, they would have earned more than $120 for every dollar invested. In fact, that figure has now risen to $160 US, a 160x return on your money. Guess who sold their Tesla shares back in 2017? Toyota. Guess what those Toyota shares would be worth today? $20 billion US. Now that figure would be enough to pay off a huge percentage of Toyota's current debt. However, no brand in this year's top 100 rankings, automotive or otherwise, grew as fast as Tesla did, which added a staggering 184% to its 2020 value of $12.8 billion to be worth $36.3 billion. In 2019, Tesla was outside the top 100. And realistically, this increase in their so-called brand value is in line with their incredible increase in sales and revenue this year. You might recall that Tesla haters often say Tesla can't make a profit unless their automotive credits that they get from other manufacturers keep coming in. Well, guess what? Over the last quarter, Tesla's profits in the form of credits from other companies actually significantly decreased. They halved versus the previous quarter. And yet Tesla's revenue significantly increased. In fact, they are now the most profitable auto company in the world on a per car basis. So Tesla's 26th place jump in 2021 is also the biggest of any brand this year. Only CRM tech company Salesforce.com up 20 places to 38, and online payment systems PayPal up 18 places to 42 came close to matching Tesla's meteoric ascent. Like I said, Tesla's rise over the last 2 years correlates very clearly with the sales success of its latest mass market vehicles. The Model 3 hatchback, the Model 3 fastback launched in 2017, and the Model Y small SUV launched in 2020. Now, since 2017, Tesla's production volumes have quintupled, in fact more, five-tupled, whatever that's called. Tell me in the description below, the comment section below, what it's called. From just over 101,000 that year to more than 527,000 in 2020. And they're on track to deliver around 900,000 cars this year, even in the so-called semiconductor chip supply chain shortage crunch. Now, Tesla's 2021 production tally stood at 624,582 at the end of Q3, and it's expected to exceed 900,000 by year's end. So my view on Toyota being worth more than Tesla, in fact, a lot more than Tesla in these rankings. Toyota is a dead brand walking. They are the car-making Nokia standing around whilst the rest, led by Tesla, but Volkswagen and BYD also, race past them with battery electric vehicles. Rest in peace, Toyota. If you're invested in Toyota, now is the time to get out. I can't yell that loudly enough. I don't want you to lose your money. In fact, I want the opposite. Whether you invest in Tesla, BYD, XPeng, NIO, even Volkswagen, all of those options are infinitely better than sticking your head in the sand and pretending that the EV revolution is not going to happen, and that the measly, minuscule amount of money Toyota has apportioned to making EVs is going to make any difference for the company when they are disrupted. That is a fact. Thanks for watching the channel. Thanks for subscribing. Thanks for supporting. Thanks for liking. And let me know in the comments below what you think. I'll see you on the next one. Bye-bye.